talking about buying stocks during the dip. What about real estate? Isn't it the best time to buy now as well, even though interest rates are high? So he's basically asking, he's buying into the idea that you should buy the dip with stocks. I think he's implying that now is a dip, and he's also implying that now is a dip in real estate. What do you think about that?
Yeah, I don't think I understand he's trying to figure this stuff out. But first of all, are interest rates high? I mean, relative to what? If you go back to, this isn't quite ancient history yet, but the early 1980s, you paid 14% for a mortgage if you could get one. The US government at the peak was paying 19% to borrow money. So interest rates are actually quite low relative to historic levels where they've been. And sure, they've gone up a lot recently, but from levels that amount to zero, and they're still negative. Interest rates are still negative relative to the depreciation of the currency. But, trying to predict interest rates, I've told that joke about Einstein goes to heaven here. Predicting interest rates is very, very hard to do. I think they're generally going up. But the problem with real estate is it floats on a sea of debt. So interest rates do go up, it's going to hurt real estate. And interest rates, and look, this is a real problem. The one thing you want to remember is, yes, you want to have real assets, real wealth, and you do want to have a place that you can call your own, that you can live and store your stuff in. So what should you do? Should you be buying stocks on it? No, we've had a 40-year bull market with artificially inflated earnings. And the only stocks I'm interested in buying, and I am interested in buying them, are oil stocks, natural gas stocks, mining stocks, gold stocks in particular, and uranium stocks. That's about it. I mean, if the market gets as cheap as it's gotten many times, just in my lifetime, it can get much, much cheaper. And of course, tech stocks, many of them have already fallen 50, 80, 90%. Many are on their way to bankruptcy. I don't know. What's your view on this, Matt?
Well, I think the whole mantra of buy the dip is a bull market mantra. It works in a bull market, and it's actually it's awful advice when you're not in an obvious bull market. And so like lots of people were saying, when Bitcoin was at, when it fell from 67 down to 55, it was like buy the dip. And then we said when 55 to 50, buy the dip. 55 to 35, buy the dip. If you've been doing that same approach with buying stocks over the last 6 or 9 months, like that certainly is you're way underwater. And I think the same thing if you're buying the dip, it's this minor dip that we've experienced in real estate so far. I mean, sellers have just begun to discount now, just begun. So the discounting isn't even started yet. So I think it's going to get a lot cheaper. And I think one of the things when you're 27, and it's really hard to understand how the markets are going to respond when you go into a bear market. And I'm lucky enough to have survived 2 of these things in my lifetime. So the dot-com boom and bust, and then the financial crisis in 2008. Both times, even though I thought it was going to happen, I made the wrong decision about how to trade it both times. And so it's just way more complicated than you think when the markets really get sucked into a major downdraft. And so you have to be very, very careful. And the cavalier idea of buy the dip is, and it works great in a bull market, but I think you got to be very, very careful now.
Yeah, I totally agree. And there's one more thing. When people are still talking about buying the dip, it means that they're still pretty optimistic about the market. When you really want to buy is when nobody wants to even hear about the stock market. We're a long way from there. So I guess the answer that our friend is looking for is, what should I do with my money right now? And what should you do with your money? Look, we're in the twilight zone where nothing is really cheap. And that seems metaphysically impossible to say nothing is really cheap in a bargain. But as close as you can get, gold stocks and oil stocks are about as cheap as you can get. So if you're going to buy anything, buy them. Buy some gold coins, put them away. Buy a piece of real estate with the longest fixed rate mortgage you can get, because you're still, even at 6%, you're still paying negative 3% or 5 or even 10% in interest. Do that. I mean, that's kind of simple. And learn to speculate, but don't confuse speculation with gambling, which everybody winds up doing. Look, this is a real problem. I hate to pontificate as to what someone should do, because over what time frame? Over
this is the question.
A year,
this is the question.
10 years, over a lifetime? I mean, this is very problematical.
Well, so
And
you're
things
talking like,
change constantly.
and I think this really matters. Like when I think about buying real estate, for instance, if you don't imagine, if you're not fairly confident that you're going to be in that property for a decade or more, you shouldn't buy it. I don't think either, because especially now we know we're basically still at the we're next to the top of the market where real estate. Yes, interest rates are going to go up, and but that's going to push real estate prices down. I mean, so
Yep.
the value, if you buy anything, even at this low interest rate today, you're going to be underwater in 2 years probably, because it will lose value. So yeah, I think the time frame is the big question, and I just think it's time to be cautious. If you have extra cash, if you have resources, I think you just need to be very careful with them.
Yeah, and just a historical reference is that during the last depression, during the 1930s, many properties were available for back taxes alone. And that was at a time when most people did not have mortgages on their houses. And if they did have mortgages, it was with 20% down payments, and they were 5-year mortgages. Little known fact. But you were able to buy lots of stuff for back taxes alone. Could it happen again? Yeah, there's a lot more debt in the world today. Taxes are a much bigger element. So, but on the other hand, listen, you want a place that you own, and it's good to have a mortgage inflating out of existence if you're going to keep the place for 10 years. It's so tough to give relevant, good advice within a meaningful time frame to somebody out there in the ether.
Yeah.